It's only a few fractions of a second sooner, but if you're running supercomputers, Saluzzi says, it can be an eternity.
What you're saying is the people with the fastest computers have an advantage. They get the best deals.
Every time. Absolutely. There's no doubt about it. I mean, if they're spending that kind of money and they're using that type of infrastructure, they're doing it for a reason, and it is to get a speed advantage in that respect.
It's not just the speed of the supercomputers that's important, it's also their physical location. The closer they are to the stock exchange's server, the quicker they'll be able to get critical market information.
Well, this has been in the works for at least 4 years.
Larry Leibowitz, the chief operating officer of the New York Stock Exchange, believes its massive new data center in Mahwah, New Jersey, will help the exchange regain some of the market share it's lost to electronic trading platforms. And he's busy persuading traders to lease space in these stark black boxes for their supercomputers.
This is one of the pods?
This is one of the pods. This is the nerve center.
It's called colocation, a service that high-frequency traders will pay tens of thousands of dollars a month for, and includes access to raw data from the exchange that is almost instantaneous.
We're getting down to, how fast can the electrons travel at this point.
They can predict the price of a stock before you can because of the speed that they're using.
So they actually see the trades before you do?
They can see order flow coming into the exchanges before a regular person off of, say, a Bloomberg, or somebody who doesn't have the co-location, the data feeds, and all the other sophisticated technology that they employ, which is not cheap, by the way. It's extremely expensive to set these things up.
How much faster do they see it?
It could be a few milliseconds.
How much of an advantage is a couple of milliseconds?
Millions, if not billions of dollars a year.
That edge, Joe Saluzzi claims, has made high-frequency traders the new insiders on Wall Street, and he says he spots signs of predatory behavior every day. Saluzzi, who trades large blocks of stock for institutional investors, says the supercomputers are programmed to place and then cancel thousands of orders a second, trying to sniff out which way a market is moving in order to jump in ahead of big rallies and sell off before big declines. He calls them parasites who exploit a technological advantage to suck money out of the market and add no value.
Does it raise capital for companies?
Absolutely not. If anything, it's distracting from the capital raising process.
Do these high-frequency trades have anything to do with market fundamentals?
Valuation is irrelevant. It's all about just moving the price up and down the ladder all day long. Each day is new. Each day starts fresh. So you have to question the true valuation of the markets now.
Larry Leibowitz of the New York Stock Exchange says there is absolutely no evidence that small investors are being hurt by high-frequency trading. Most of them, he says, don't care about pennies when they're buying and selling stocks, and they're in it for the longer haul.
Look, there's always been charges for as long as trading has existed that people are front-running orders, manipulating stocks. This is nothing new. I think now you add to it the mysterious element of the computer, and it makes people even more mistrustful.
Leibowitz and other proponents of high-frequency, high-speed computer trading say it's performed a valuable function, tripling volume, reducing stock spreads and transaction costs, and providing liquidity to the markets.
Liquidity means that if you want to buy or sell a stock, you could do it right away, and you could do it at a fair price. That's what liquidity means. And without short-term traders, there is no liquidity.
Traders like Manoj Narang say their presence in the market is making it cheaper and easier for everyone to buy and sell stocks. But regulators and lawmakers like Senator Ted Kaufman of Delaware have other concerns.
Clearly, liquidity is way up. But what I say is liquidity is always trumped by transparency and fairness. You can't have fairness if you don't have transparency.
Senator Kaufman, who has both business and engineering degrees, says he's a big fan of technology, but he thinks it's gotten way ahead of financial regulators' ability to monitor it. Right now, it's not even possible to determine for sure who is making high-frequency trades or what they're telling their computers to do.
We do not know what's going on inside those boxes. There's all types of allegations about what's going on inside there. And basically what can happen is you can have these meltdowns where you can have a computer just go crazy and cause all kinds of problems.
Which takes us back to the mini crash on May 6th and one of the scariest rides in stock market history when the Dow Industrials plunged 600 points for no apparent reason. Turns out it was triggered when a mutual fund's computer dumped $4.1 billion of securities on the market in a 20-minute period, which were then gobbled up by the computers of high-frequency traders and sold almost immediately, sending other computers and traders heading for the exits.
The events of May 6th scared people. I don't think there's any question about that.
SEC Chairman Mary Schapiro had already proposed rule changes before May 6th that would allow regulators to track and tag high-frequency traders, and she is now considering further measures.
Are you comfortable with computers making, 50 to 70% of the trades on Wall Street?
One of the concerns is if one goes wrong, if it operates in an unexpected way, given market conditions, what's the impact of that algorithm that has behaved in an unexpected way on lots of other investors in the marketplace?
And Chairman Schapiro says it's happened since the May 6th crash, after circuit breakers were put in place that automatically halt trading in a stock that moves more than 10% in a 5-minute period.
A number of times that those circuit breakers have been triggered has been because an algorithm operated in a way nobody intended for it to do.